But let's get to Dan Ives now, Global Head of Technology Research at Wedbush Securities, as this market digests this news. Dan, we are seeing a little pairing of those declines. You were looking for a mic-drop quarter. Could you call this that? I think you print this press release off and frame it, because look, what you're really seeing here. This is a stock that's going to be green tomorrow. What they're putting up in terms of Hopper, in terms of overall growth, it's exactly what the bulls want, and he'll continue to underpromise. Next quarter, that could be a 4 in front of it in terms of ultimate revenue. This is just the beginning of the AI revolution. $4 trillion on its way. Sure, and long term, you may very well be right. But are you not concerned about this plus or minus 2% that the company is reporting on revenue simply because the market wants the company to beat? And beat well, every quarter? Yeah, if you looked up sandbag special in the dictionary, you'd see this guidance. And I think the street's going to look through it. I think this is a stock that probably will be up even on the conference call, because if you look at everything that they did here in terms of the data center, you could, with Hopper, be talking $5, $7, $8 billion per quarter. That was something many thought could just be a few billion. So as this all plays out and you start to look at numbers over the next, call it 12 to 18 months, the godfather of AI, Jensen and Nvidia, continue to be on that Mount Rushmore. It just shows it's starting with Nvidia now, with second, third, and fourth derivatives playing out. That's why it's 9:10 p.m. in this ag party that goes to 4:00 a.m. Has the time changed at all since you came out with that? It was 9:00 p.m., and now we're at 9:30. Got it. So my other question to you, since there's so much commentary on Blackwell and how production will ramp up into fiscal 2026, with production shipments beginning in the fourth quarter of fiscal year 2025, which is the current quarter, does Nvidia break out Blackwell revenue, or is this something that you and investors always need to reverse engineer out of the data center numbers? Yeah, essentially, investors reverse engineer. But if you look in terms of some of the wording, they're basically saying any of those heating issues, don't worry about it. And I think that's going to give more and more comfort. This is going to ramp significantly in terms of that. And I think that continues to be the narrative because, as we've spoken about from our Asia trip, demand to supply is 15 to 1, and there's only one game in town, and he's wearing a black leather jacket. His name is Jensen, and I think that's why this continues to be in the early days of what I believe will be a $4 trillion conversation. You mentioned the overheating issues, these Blackwell overheating issues, which might demand a redesign of the servers hosting the chips. The businesses that create the servers include Dell, Hewlett-Packard Enterprise, and Supermicro. Do they wind up carrying the burden of having to rework everything? Yeah, but ultimately, I think that is something that's really just noise. From all the checks we do. That's why you look, when you're at the top of the mountain, you're always going to have somebody attempting to take shots at you. But if you look at how Nvidia is playing out here, there are really no production issues as this all accelerates. And that's why when you hear from Jensen today, I think investors are going to realize this AI revolution is now about second, third, and fourth derivatives. You look at what's going to play across software, across the rest of semis, across cybersecurity. If you're a tech bull, this paired with everything we've seen in the previous few weeks in terms of Trump, Musk, and everything else is really going to set up a Santa Claus rally. So we are seeing Nvidia suggesting that Blackwell is going to surpass supply for several quarters, but that there are some supply constraints currently. You do those channel checks, Dan. Tell us the truth. Where have you spotted those bottlenecks or those prospective spots where supply will be constrained? Everyone's waiting in line. Nvidia and Jensen are the only party present, and they are at velvet ropes. You desire those next chips, which is the problem. That is the new gold or oil, and that is what everyone wants. Yes, but that's the client's perspective. I'm speaking of Nvidia's ability to deliver things on the supply side. Ramping. Look, it will take time to scale up, just like any new chip or production. But if you had expectations, I would argue that, compared to 3 months ago, you would be feeling fairly well as you sat there in 3A watching Netflix while Jensen pilots the aircraft. Can Jensen increase the prices of those Blackwell chips even further than he has already done in terms of pricing power? What do you anticipate happening in that regard? And should consumers expect those chips to cost more? They most certainly can. But at the moment, market share is the most important factor. They will simply keep moving farther and farther out. Additionally, you now have $340 billion in AI capital expenditures in your sights, even when you consider what the hyperscalers are spending. Then you consider private investments, sovereigns, and everything else. It merely demonstrates we are in an unmatched, once-in-a-40-year tech revolution. Because of this, Jensen is the Mount Rushmore, not Delano or Karp. You previously mentioned that there is a velvet rope and that there are many individuals in line to purchase these chips, with hyperscalers at the head of the queue. Where do sovereign buyers stand, though, if you include them in the mix? Are they allowed to cross the line? In the center of the line are sovereigns. Oh, my name's on the list, they say. You can't get in front of the people at the front. Big tech is telling them. The middle of the line is still occupied by sovereigns. They will get in, and behind them, it's the rest of the Fortune 2000. For this reason, we will be discussing $4 trillion and $5 trillion. We are only at the beginning of this tech boom. Before the show, we discussed in the green room how crucial this particular stock is to a series of trades that determine whether the stock market rises or falls. It's difficult to identify a single business that dominated the world economy or financial markets over literally centuries. There isn't one that, in my opinion, hasn't received any official support from a government, even in 1990, that isn't as large as this one in comparison. Therefore, it is crucial for those who trade tick by tick immediately following the earnings and call, as well as for those who stand back and consider the big picture. And to be honest, this is where American exceptionalism lies. This is the reason why the United States has outperformed for decades or longer. It's the supremacy of technology, the weight of technology in our stock market, and the existence of businesses like the Mag 7 that will spend $500 billion on R&D and capital expenditures over the course of the next 12 months. So to put that in perspective, $52 billion was spent on the Peace and Science Act. This is many multiples of that. It's just the scale of our supremacy. Nvidia is the cornerstone of it. So whether they disappointed or not, to me, it's the fact that we have this structural advantage. Let me make one point about that I think is really interesting. That's the estimate for $500 billion in capex and R&D over the next, what did you say, next year? Okay, so if it comes in at $450 billion, just think about that. What happens to these stocks? They're going to go down a lot. And you know what I mean. It wouldn't progressively take much, because estimates are going up. And just to sum up, if you go back to Microsoft, you'll see that they're a 19% customer of Nvidia. We also discussed the increase in capital expenditures. Not long after they reported, it didn't rise all that much. As a result, the step functions that were prevalent, say, 3 or 4 years ago, are no longer present. They also talked about being capacity constrained, one of the reasons why they didn't have bigger revenues. Now, their cloud company is expanding 31% year over year, which is excellent. They're taking market share from AWS. I just kind of feel like we're going to go from capacity constrained to capacity overbuilt, and that sort of stuff, in the not-so-distant future. So when you're coming in, and you're beating these numbers only by a hair, and the stocks are still sticking around, it shows you that investors still want the exposure. However, I believe it will eventually be one of those situations where you start to notice a few quarters of losses, not only in the hypers, but also in the picks and shovels.